Hello, folks. Welcome to Market Trends. I'm David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. Historic day for the market here. New highs, S&P over 5,700 for the first time. And just going to show you a few disclosures to begin. Going to add a few notes as well into the chat. If you have any questions, go ahead and please feel free to ask them in the chat. You're going to go to TradeStation.com. and then go to the Insights button at the top of our main page. It'll take you to our blog where we have some more information about some things we're going to be showing. Okay, we start off with these standardized returns. We might be talking about some ETFs. Do use them some, so use standardized returns for them. We also provided a link to where you can get the prospectuses for those ETFs. Some of these we were talking about in State of the Market back on Monday, talking about the potential for things like XLC to break out through 88, XLB potential for breakout. Some interesting things kind of brewing here, and I think it's a new chapter, a new page. I think this is a moment people might look back on and realize that we could be entering, in some ways, a pivotal time in a truly kind of solid secular historic kind of bull market. All right, so if you go to TradeStation.com and you go to Insights, all right, this will take you to this article right here. And I also wanted to mention there are some other articles that are kind of interesting. We actually are going to be talking a little bit about Caterpillar, but you might want to check this out. It's a technical analysis of Caterpillar breaking through an interesting resistance level. And then also this article right here, we highlight some interesting sort of points about the way the economy's actually been getting stronger even right before these rate cuts. And again, rail traffic, we've talked about it, and it's been very interesting to see this rail traffic so strong right before we got some of these strong economic numbers like industrial production. They all kind of fit together. Auto production, autos are big for rail, intermodal traffic. So these things are all kind of pointing in interesting direction today. We had jobless claims lower than expected. We had strong housing data this week. So these things suggest that the strength we've seen in the economy might actually kind of just continue. Look at how the GDP estimate from the Atlanta Fed has been moving up. But this is the main article you want to look at here, today's market trends. This is a rundown we're going to be working off of. So, by the way, I also did want to let you know that I am going to be in Miami the week before Thanksgiving at the Crossroads Summit, which TradeStation Group is sponsoring. And Crossroads Summit is a website right here that you can actually get a link if you want to actually see, if you want to sign up and get tickets. There's going to be some really interesting speakers talking about changing trends in the world of business and economics. And I'll even be interviewing some of them. So hopefully you can make it November 21st and 22nd in Miami, crossroadssummit.com. Okay, great to kind of be able to look at some of these situations happening in the market now, because we've been looking at some of these things in a while. So I'm going to go to this chart, which is one that I kind of update myself periodically. I just call it my MT blog chart, but there's a few interesting things about this that I do think are kind of important to take a look at. And I think the most important thing to begin, aside from the fact that we started hitting these highs beforehand, was these higher lows, this higher low right here. So on the monthly chart now, we have a low, a higher low. This low, as we said at the time, was a 50% retracement of this surge. It was also this support level from back here, going all the way back really to this period in June. So this is pretty interesting. Now, what in many ways was most interesting was to see the 9-day rate of change start to go positive. If you look at this historically, you can see when it goes negative here, we had this pullback in April. And then as we started getting positive and stayed positive, that really was a signal. And the same sort of thing here is that once we got negative, we had the acceleration to the downside with this big pivotal day that we talked about at the time. But now in many ways, as we got up and stayed positive, it became difficult to have any kind of pullback. Now, what is interesting is, I was premature looking for the tight sideways movement back here. But I think it's important to realize this market has done this when we have these tight sideways patterns followed by more upside. I've talked about it a lot, and this kind of lack of pullback. But I think we kind of have that here. And when you have this sort of pattern like this, there might not be a real retest of these old highs in the near term. I mean, this could be something here where there's more of anything extension. I think it's very interesting when you look at the initial reaction, the market was lower, then futures started climbing yesterday evening. And I think it's interesting because you know, would imagine that what you basically saw was, the big fund managers suddenly started getting all these people who went to their 401ks and they're kind of mutual funds, the ones that are just standard mutual funds, not ETFs. And suddenly all these buy orders started coming in last night. People come home like, wow, the Fed cut 50 basis points. I'm going to move some of this money over back into standard, sort of S&P or growth stocks or whatever. So I think what's really interesting is to see that we have been at a spot here where negativity, as we've talked about, was actually pretty high. There's been a lot of cash on the sidelines. There's been a lot of reports about how, big investors were negative. We talked about some of these interesting reports from S&P just today or yesterday. S&P Global basically said that the institutional investors were net buyers in August for the first time all calendar year. Now, I'm not sure what they were doing back here in April, May, February when the market was running. But this is what S&P Global said. S&P Global also said that sentiment had hit a negative in August. So these things kind of overlap. We had talked about how different measures of sentiment had basically suggested there was cash on the sideline. So these are all things we've been talking about, and I think it's important now just to take a step back and kind of realize here that we have a combination of an accelerating economy, as we discuss here, jobless claims coming down again today, for example. But then in addition to that, with the Fed cutting rates. So, I mean, we really have to realize that this is an environment now. Also, on top of that, seasonality and double-digit earnings growth coming, and cash on the sidelines. So all these things kind of coming together. And, I think we have to realize that this is an environment here that might be difficult to have, significant pullbacks and actually may have the risk of getting a little bit more kind of aggressive to the upside. So I think that's kind of, I think a way to kind of look at it. What I'm looking at now potentially is, do we cook RSI again? Let's call it when we go up to 50, over 70 on the RSI and we just kind of sit there. And I've seen this pattern before. And, I'm a believer that at least on the big daily charts, RSI is a trend signal more than an overbought, oversold signal. When it goes up to overbought, it tends to keep hitting new highs. And likewise, once it hits an oversold condition, it often continues in a weaker in weakness. So from my view here, it looks here that going up overbought on RSI, it's done it before, and that might be what we kind of see now, something of a tight uptrend. And I think that's it's something we want to just kind of bear in mind. We have this breakout of essentially, a 2-month consolidation period. It looks like a bullish ascending triangle when you really look at this. So I think, let's not overthink it, but I think we also have to realize that when you get a breakout like this, it might take some time before there's any kind of pullback. There could be, something of a run before we even go back and test something like this. So this is something that is not really giving it a lot of negative things that I can see. All right, so one thing that's interesting here is I was looking over at some companies that are kind of if we go to MT Main and we go to our price grid here. I already brought in the S&P 500. I didn't want to waste anyone's time, but basically, I think it's interesting to kind of look at these companies that are kind of going up and hitting new highs. It's interesting if you look at some of these because if you look at the high. This shows the high as of last night's close, how many days since the high. So if you see in this case, this number is, like 50, this tells you that Arista Networks is hitting a new all-time high today or a new 52-week high today. So because basically it's above its 52-week high, but yesterday it hadn't made a 52-week high in 51 days. So basically this is a way to start spotting new things. Another new high today is Quanta. I mean, that's not a super actively traded name. However, it's an industrial stock. And I think right here we have to take a look. We've talked about in State of the Market, this line, and I'm sorry, XLI is what we want here. We talked about the line, the zone between 120 and 126. And then we came down and found support at 126. And I think right here we're in a spot where, this is, so XLI itself is extended to the upside. But I think the key thing is that the industrial sector is in a spot now where, like I said, the economy is, not bad. The Fed's cutting rates, put those two things together, and something like industrials really might be a spot people look. And I think that's really interesting. We had Caterpillar as this thing we were looking at, and I think look at Caterpillar here. I mean, this is like potentially breaking a pretty important level on a pretty long, and a pretty interesting kind of longer term chart here. Um, at this point, with strong tailwinds and seasonality going into year end potentially, and with the macroeconomic situation and everything else, the question is, does Caterpillar stay where it is, or do people look forward to have a strong end to the year? And I think this is a sort of name that might get some kind of attention because these things have been dead for a while. Some of these names, so just because XLI is strong doesn't mean that that's where the opportunities are directly in XLI, but it can mean that looking for those names that are related to XLI might make some sense. Okay. All right. Let's see. I actually want to just very quickly mention we have this here. Do you have this weekly chart? I'm sorry. Let's go to this. This is my weekly chart that's kind of connected. But I want to point out that if you look at the way the S&P has, we've seen this pattern now a couple of times. Look at how this basically comes violently off a low and then holds, and the next week has big follow through. Well, look at the same thing essentially happened last week. We had this huge bearish week, and immediately we erased it. And I think that tells you a lot. It basically says what I've been kind of saying, which is that there's not a lot of sellers. And this is a market where there's not, there are not, that I'm aware of at least, really good up to date data that I have access to about the amount of margin debt and things like that in the market. But my sense overall, and the data that comes from the Fed is delayed. But the thing is it doesn't appear that there's a lot of excessive risk taking or people using a lot of leverage on the long side. So I think that's kind of interesting here in terms of there's so much cash on the sidelines. I mean, we can just quickly look at this data from if we go to Fred money market. The amount of cash is still. I mean, the Fed is basically saying, get rid of that cash and put it somewhere else, and with this 50 basis points. So I think this is also something we want to kind of bear in mind is that, this data is old. This goes back to August. I mean, they update it irregularly, but the thing is that I think it's clear that there is a fair bit of cash on the sidelines, even with the S&P hitting new highs. All right, so that was pretty interesting. We look here at what Jerome Powell did was because basically, if you look at the back in July, I've actually noticed that the Fed statement has become less substantive, and the Jerome Powell's prepared press release has become more meaningful. Her prepared statements during his press conference, I should say. In July, he had this one line at the end of the first paragraph. He said, "We're strongly committed to blah blah inflation, but now we are committed to maintaining the economy's strength." So what happened was inflation was first, and now it's second, and the job. So he basically flipped the mandates. That's what I think is happening here. It's interesting if you kind of look at this. This was much less of a concern about inflation. So that's to me the real takeaway from this event. Um, and they also raised their unemployment projection. So that actually tells you when they kind of put that target out there, it tells you that the thing they're going to be reacting to. And if they're reacting to an expectation of bad employment, then that's basically means that they're going to be more leaning on the cutting side. All right, so let's see. The big weekly candle, I mentioned that. All right, now it was interesting to notice. I saw something from I've been trying to kind of keep up with Nvidia and reading some different sort of tech bloggers and people like that. And what's interesting is there was some Japanese blog that was saying that Nvidia was going to stop deliveries of its existing a certain existing semiconductor that will be replaced by Blackwell. So these things kind of continue to happen. That the Blackwell thing is out there, the iPhone thing is out there, the robo taxi thing is out there. So these are all things for the mega caps that are out there and remain potential catalysts. So I want to point out here, talking about Apple, it's very interesting if you look at Apple here and we go to our drawings on our award-winning TradeStation platform, and then we go to the Fibonacci price retracement lines. If you look at this move here, I think I drew it from here to here. Look at how it exactly hit that 50% retracement before bouncing. So again, I thought that was a pretty interesting thing that was I wanted to mention. Um, and we've seen a little bit of there was someone was saying today that apparently there's evidence from T-Mobile that that the iPhone demand is strong or something like that. A lot of these things I'm not massively sure how much exactly it's a one for one thing that matters. People look out into the future and they kind of see this stuff coming with Apple, and so, it's a question now of, do we get the rotation? We back to mega caps. We have seen this period of weakness for the last few months, and that's something I think we have to kind of watch and see. There is, I think, an argument though for the banks, for the financials here, for materials, for industrials. There is an argument beyond mega cap growth. So I think it's a question of there could be that explosive move in small caps. And I think we should at least be aware of that. And that is what a lot of people have been kind of predicting based on their models, people like Tom Lee from Fundstrat and stuff. And, you know, I think I want to just put it out there because that is something that I think we have to realize if we're looking for active, trading opportunities. It might be something where, today we see this strength in the large caps, but, so far this half, there has been that strength in things like small caps. So, I think at this point, it's not hugely clear to me, but the data is when you look at the idea of the Fed being, more dovish and stuff like that, over a period of weeks, it does actually potentially give more support to the small caps. All right. So now wanted to actually just look at some opportunity, some things that kind of popped up to me that look kind of interesting. I'm going to hide myself so you can see everything with Option Station Pro and stuff like that. But off the bat, I mentioned Caterpillar here. And so to me, we can look at Caterpillar. And what's kind of grabbing my attention with this is the potential of a push toward 400. Nice round number. People might be looking for something like that. And, I think it's really interesting to see this level here. We had done this trading view idea that you might want to check out. But, basically, I was looking at someone saying, maybe in a time frame like October, if it were to go to 400 in October, potential way to look for something like that would be something like a call spread of something like the 390s up to the 400s. The stock right now, around 370. Right? And if you were to click on the 390 on the ask and then go to 400 and hold down control and click on the bid, you see that this call spread is, going for around 2.25, which is, about, potential 4-to-1, risk reward from the stock moving up at this point about 10%. But I think it would be, just something to kind of, consider. I think when we look at this environment right here, this potential for strength in the cyclicals, I think is pretty interesting. Bank of America was one that really grabbed my attention. We have seen this pattern all over the place of basically this low and then this higher low. I mean, this to me is very interesting when we look at the fact that this thing has been just kind of dead. Now, a lot of this was because Warren Buffett was unloading his position, but I think this is very interesting here to look at Bank of America, because I mean, this selling seems to have resulted from Warren Buffett, not from anything all that, substantive with the company. It was actually a strong earnings report that sent it up, and then he rang the register. So, people might want to be looking at something like this of something like the 42, 44 call spread. Does it go back to those highs in October? So we look at Bank of America here. A person could click on the 42, hold down control and click on the 44. Wait a second. I need to clear these out. Sorry. I think I still have one of my right, and then click on his. And you can see that call spread is about 50 cents for also about essentially a 4-to-1 risk reward or 3-to-1. And essentially that would be looking for a move toward 44, which is the high, about 10% in the over the next 3 to 4 weeks. So basically, I just thought this one was interesting because you also have this very tight level here on Bank of America, and you have this pattern of this higher low. Another one that was kind of jumping out to me was, Meta. We've talked about this stock. I thought it was very interesting to look at Meta, not MetLife, but Meta. I mean, this stock really, it was fascinating. It really didn't pull back very much when the market crashed. And now here we are breaking out to an all-time high. So basically, we were, XLC in State of the Market on Monday. That's when we look at the weekly charts of the indexes and the sectors. We've been really kind of, obsessing on this 88 level. with XLC here. And I think it's interesting to kind of see, because this is back to a level from, it's essentially been trying to break out. And now here we are. Is this now the breakout? This is the first weekly close at at a new weekly, high essentially. So from my perspective, this could see follow through. And Meta, and that's, I don't know. Meta's probably not the biggest name. You have Google in there, which is probably bigger in terms of market cap. But you're looking at a pretty interesting breakout overall. So look at Meta now. The thing about Meta is the options are relatively expensive, and if you were to look at it with a call spread, it's the risk reward is potentially not amazing. If you were to look for a move to the upside, essentially if you look at the call spreads, are relatively expensive in my book. But people might also be thinking of, instead of being buyers, to be bullish sellers of something, and something like, for example, in Meta, selling the something like the 550 puts, clicking on bid, and then looking to the downside and buying the 545s, and basically brings in about a $1.42 credit. That's a put credit spread, and basically as long as the stock stays above 550, that position will expire worthless at the end of next week. If it pulls back under, even if the stock goes under, it gives you about $1.50 potential, of credit before it actually becomes truly a loser. And sometimes when stocks are trending higher like this, selling put spreads underneath them can be a better or a more you know high probability way of making money, because if you're paying for the upside, those options can be expensive. But if options are expensive, then selling the downside can be a way to follow the same trend. And that's something here I wanted to point out. Now, some other names that was just interesting to me, and I don't see options, anything with the options yet right now in them really, but General Motors here is very interesting. Also, look at this potential bullish kind of triangle here, and I think it's people might be watching. The thing I thought was so interesting about it is the 50 mark is such a clear line in the sand for this name. So I think people might be watching General Motors around 50. It's a company, it's a consumer cyclical as well, and lower interest rates would not be bad for them, because people finance cars and stuff, and they also have debt themselves. So lower interest rates for a name like GM wouldn't be a terrible thing. Another name that's been leverage cyclicals. Now these are consumer discretionaries. We were kind of saying that in our view, the consumer discretionary, the XLY, was the single strongest opportunity, because it had Tesla, which by the way has that robo taxi event. And we were talking about this potential breakout. We were really focused on the 188 level, and it really has panned out more or less as we had expected. And here we are now. And the thing about potentially doing XLY is it has some space up here to 215. The other thing about XLY is that it has names like General Motors. It has names like CCL. These are the leverage names. These are the non mega cap names. And this stock, I mean, it's extended on this chart, and this could be something where it doesn't necessarily do very much in the really near term. But look on the weekly chart at a name. Look at CCL on the weekly. So again, there's a lot of these things now that are facing these sort of back from the dead sort of potential, where they can they're looking back at levels from 2 to 3 years ago, and with the potential, with a rate cutting environment and money potentially coming off the sidelines, and that sort of theme in play, that people might actually be looking for some of these to be, maybe do some other sort of things. If you think long term of there being a strong economy and all that stuff, and the potential for things like cruise ships and that sort of thing. I think this is also a lot of debt. So as interest rates come down and things like that, they benefit on all those things. So CCL was another one. I don't see anything with the options per se, but this is one that was just kind of grabbing some attention to me. We have a pretty clear line here around, kind of 19 and a half or 19 and a quarter on this name. These lines here, I'm not sure exactly where we would say the breakout occurs, but I think we have some lines, if you want to do your own chart work, to just kind of realize, we have some clear resistance on something like this. We have a potential fundamental thesis in terms of the strong economy, in terms of rate cuts, in terms of consumer discretionary. Let's actually take a quick look over here, because on our key ETFs, so we look at the XLY, in the last month, XLY is the leader on a year-to-date basis. It's very interesting. If we went back about 2 weeks ago, XLY would have been like the worst performer year to date. You can see here, like energy at one point briefly went negative on the year, and XLY is basically, it was the worst performer for a long time. And I think we got to just kind of wait and see, does it sneak its way back up with the strong economy, with the holiday season coming? I think this is something that people might want to be kind of thinking about, the consumer discretionary thing, because of that cyclicality. Okay, so another consumer discretionary, Expedia, EXPE. This is another one. Come on, EXPE. That I'm going to close my Option Station Pro. I think I need to do something to my computer. It's in the last few weeks it has started being much slower, but it has this gap. Expedia here has this gap to the upside. This is a strong earnings report right here in Expedia. So that to me is one also that people might see something in. Consumer discretionary had that decent quarterly report back there. Now another name that jumped up when I was looking at some rally and pullback scanners is Upstart, UPST. Now this is another kind of leveraged kind of more volatile kind of name, but in a more bullish environment, these are the sort of names that might potentially, be interesting. And UPST had a strong earnings report. It had some analysts get kind of, bullish on it. We also saw it come down and hold this level from July in the 50-day moving average. The 50-day just crossed through the 200-day. So these are all some things here. It might be a little bit more of looking for this kind of break here, through this level around 45 to 48. But the thing is also on the weekly chart, you can see potentially lots of space on it. So, if you were to look back at what Carvana looked like about 18 months ago, this is kind of what it looked like in some of these cases. And I'm not saying, not trying to predict anything like that. I'm just saying that when you're in a situation of interest rates coming down, a situation of the economy being okay, a situation of, consumer discretionary and those sort of things, these sort of, things, when you play it out over a period of 6 to 8 months, they can really come together. And during the period of 6 to 8 months, there can be a lot of things on the kind of short term. So this is also UPSD is extended, here just on the short time frame. But this might be one where people kind of watch. If they used over here something like MA tools, you can see when things flick down and they hit that 8-day EMA, and they maybe will give an opportunity for a few hours in the morning. This shows when stocks pull back and touch the 8-day, the rising 8-day exponential. I mean, these are like that. Some of these, I mean, these are all kind of, none of these are things right now I want to necessarily talk about, but you can see how this thing works. Remember, we provide this in the blog post right here. If you go to the top of the blog, there's a zip file, and you can get this, and you can import the studies, and then you can use the workspace once you have the studies installed in your TradeStation platform. But basically, when things are kind of moving higher, you can put them in the radar screen. You can use something like EMA test. You can look for them to come down, touch the moving average, and kind of use that to kind of for trend following. So these are some of the things now, by kind of setting up some of the things we can do with the platform. We can be ready if opportunities do arise. Another name, I'm just Seagate. This is what I've been watching for a while. I mean, what's fascinating to me is this stock really didn't pull back very much. It was interesting to watch this name in August, but STX, another name that has a degree. I mean, it's not really a full-blown AI name, but it's a name that is benefiting from the overall growth of things like data centers and just accelerated computing in general. And Tesla, remember, there's this. I mean, I still haven't seen a confirmation from Tesla that they're doing this on October 10th. But at this point, I think we have to, I mean, the company would have denied it if it wasn't happening. But basically, here we had a bullish inside week last week, and now we're kind of breaking out of it. So these inside weeks are also kind of an interesting pattern. We've been watching that, and this to me is something that also, is potentially, something that could support the discretionaries. Now I did want to also mention energy is something that we have talked many times about the downward trajectory in it, and we had talked about the potential for a rebound on market. On State of the Market, we had talked about a potential for a rebound this week. It's bouncing higher more or less than we had kind of indicated, but this might be something where it can kind of rebound for a few weeks, and then maybe it'll give another opportunity to the downside. Some of these kind of things that we have put on trading view, things like Halliburton, it really, I mean, this bear flag is a classic bear flag breakdown, and we'll look for see if any of these trend following things do come back. So those are the main things I want to talk about. Don't have much more. And take one last look at kind of let's look at our MT very quickly. MT breadth. Let's just see the advanced decline line hitting new highs today. It's interesting to see that there are not that many new 52-week highs, which I don't view as a bearish thing. It's interesting. I was looking at some of the companies that were making 52-week highs, and they're really unusual names. And so the question is is that a bearish sign for the market, or does it mean basically that the big names will be making 52-week highs again? I think that's kind of more the question to ask. So we'll be back on Monday with State of the Market. Don't forget to check out the blog, check out this article here about the economy, and also, you look at the calendar just so you know next week. There's some kind of Powell speech next week. I couldn't nail down what it was, but I did see it on some different calendars. Micron reports next Wednesday, but not a huge amount on the calendar. We're just kind of drifting into the end of the into the end of the quarter. It's hard to believe we're almost done with the third quarter. So see you guys on Monday. Have a great day. Thanks.